Oil prices have historically been at the center of influencing world economies, and oil futures are the backbone of how institutions and investors forecast and make money off this volatile commodity. But what are oil futures, and why are they on the rise in terms of search today? Oil futures are financial agreements in which buyers and sellers settle on oil being sold at a predetermined price on a future date. These agreements do not typically expire with barrels being exchanged. Rather, they're traded back and forth as a method of speculating on in which direction oil prices are going. It's a mechanism that enables oil producers to secure profits and investors to hedge against price fluctuations. Today's sudden increase in oil futures interest is not accidental. It's connected with global developments, geopolitical conflict in oil-producing nations, shifts in demand trends, and changes in energy policies. The moment there's any development on war, sanctions, or production reductions, oil futures respond instantaneously, which makes them one of the most sensitive gauges of worldwide uncertainty. Traders adore oil futures due to their volatility. Prices will rise or plummet on the basis of a minor political move or tweet by an OPEC official. Such volatile movement implies huge risk, but also huge potential reward for those who understand how to play it. And today, market gossip is all about where crude is going next. Individual investors are also getting into the oil business. With sites making it easier than ever to trade, regular folks are investing in oil futures ETFs or contracts using brokers. They're not simply chasing headlines, they're attempting to make money from them. The sudden popularity of Google searches demonstrates just how much attention this market is gaining. It's not all about the profits, however. Oil futures reveal something more fundamental about the world economy. Increasing futures can indicate inflation on the horizon, and decreasing futures can signal dwindling demand or recession concerns. Governments, businesses, and analysts alike monitor these contracts for clues as to what the future holds. To large corporations, particularly airlines, shipping firms, and manufacturers, oil futures are strategic weapons. They enable these firms to budget, capex, and insulate themselves against shocks in energy prices. Behind every oil futures surge is a tide of corporate choices that mold our economy. Some experts believe we're entering a new era for oil. With renewable energy on the rise, some argue oil's long-term value could decline. Yet others point out that developing nations still depend heavily on fossil fuels, meaning oil futures will remain relevant for decades. By 2025, oil is no longer energy, it's information. Artificial intelligence and analytics are enabling traders to make more informed gambles on the future. Systems scan the news, weather trends, and politics in real time to forecast price futures. This technology advantage is reshaping the game of oil quickly. So, where are oil futures headed next? If market-shaking events continue to shake markets, volatility is what's ahead. But if tensions ease globally, prices could stabilize. Either way, oil futures will remain front-page news and continue to affect wallets and world policy. Whether you're an investor, entrepreneur, or just curious about finance, oil futures offer a powerful glimpse into how energy and economics collide. And in today's fast-moving world, understanding them is no longer optional, it's essential.